Hey there, today is Wednesday, February 5th. This is Nathan Mark. Appreciate you stopping by. I'm going to review what I saw in the markets during the morning session and really up until this point. It's 1:07 p.m. Central Time right now. And the big data point for today and information, excuse me, that came out was a few things. First and foremost was we had non-farm payroll. So it topped expectations and the market seems to like that. The other thing is Google, parent company Alphabet, is really getting hammered, as well as AMD. The data center revenue really not up to snuff. So if we look at the heat map, what's going on with S&P 500 today, as you can see, currently Google was down 8% or so. Currently down 7.72%. Meta's down. Microsoft is barely up. NVIDIA is getting some love today. But really mixed in the markets thus far. Let me go to my stock watch list. So this is what I look at. I look at the heat map. This is just really high level stuff, right? It's the S&P 500. It's every sector of the economy. And I just like to get kind of a visual of what sectors are doing well, what individual tickers are not doing well or doing well, et cetera. And you can see that by the different colors here on the heat map. So I really like this. It's in Trading View, and there's a ton of other sites that have heat maps too, but this is one set of data that I look at. Let's go ahead and dive right into the trading platform here. This is Top Step X. My goal for this month was to get a payout every week in February. If you watch my last video or the previous video, my last few videos, I shared that I had a rough end to January after getting a few payouts in January, which was great. I did not end the month the way that I wanted to end the month. Obviously, by no means am I perfect. I'm still a developing trader. I'm still relatively early on in my journey, but I have gained consistency over the past several months here. The thing is about consistency is that it can't go away. And there's going to be bumps in the road and things like that, but to be consistently profitable means that we can't let our guard down. I'm sure you've heard before, in trading, it's you versus you. And you have to do things, you have to put systems in place and have processes that protect yourself from you, from your ego. I'm a firm believer in that. For me, for how I trade, I need to have checks and balances to protect me from me. One of the guardrails that I have in place is to not trade in the evening. Don't trade from the open of the Asia session in futures, of course. That's what we're looking at here. Don't trade Asia. Don't trade before the New York Open or just before New York opens. Don't do it. I'm with my family. I'm tired at the end of the day. I don't have the mental energy and the focus I need in order to be successful, to have the best chance of executing my game plan. And I completely disregarded that at the end of last month. Long story short, I had to rethink and pivot my goal of getting a payout every week in February. Now, my goal is to this week acquire funded accounts. I have done that. And then each of the following weeks this month get a payout. So instead of payouts 4 weeks, my goal is to get payouts 3 weeks in February. Okay, so this is week 1. I have the week of the 10th, the 17th, and the 24th to acquire payouts. That is my new goal. Anyways, as far as what's going on today, sometimes I hide this stuff, sometimes I don't. This is a trading combine. Had a good day in this trading combine. This is a 50K combine. The goal for a Top Step 50K trading combine is a $3,000 profit target. You can profit 50% of that 3,000 each day to stay within the consistency rule of 50% profit on any given day. So in theory, because I profited this much, and this is a simulated account, of course. So with this profit today, in theory, I can pass this trading combine tomorrow, and I'll have 3 funded trading accounts with Top Step. So, today wasn't perfect for me by any means, but it was overall a good day. So what's going on in the markets? First thing I want to do is go over a trade idea. What I focus on and how I trade, the tools I use and what I look at is super simple. I watch price action. I'm aware of the volatility that comes from the economic events, economic data. I am aware of levels on the chart. You see these lines, and I use the 8-period moving average and a 5-minute chart, mostly 5 minutes. I do look at the higher time frames, but mostly a 5-minute chart. And yesterday at the open, I participated a little bit in this move, but one trade idea. Let's go over a few trade ideas. And yes, this is all hindsight. Okay, I said I participated a little bit in this. I didn't catch the whole thing. I couldn't focus on the open. If I had been available, perhaps I would have, caught every single tick in this move to the upside. Probably not. But what I've been looking at and doing backtesting on, especially over last weekend, as I'm processing my downfall at the end of January, doing backtesting, and one thing I noticed, and I have been aware of this for quite some time, but one thing I noticed is when you get a candle, this 825 5-minute candle, if it's green or red and closes above or below the 8-period moving average, there's a high probability that there's going to be follow through, either to the upside or downside, depending on, what direction the candle is moving, right? And so yesterday at the open, I would have shorted this because of this hammer candle, this hammer pattern to the downside right here. The blue line is the 8-period moving average. The candle closes below the 8. Okay. I would have shorted it. Stops would have been here. So let's say in theory I got it at 418. My stop would have been at 440 or some change. It would have been a pretty big loss. Now, the idea is that because this candle closes here, I would have looked for follow through to the downside into this area here towards this orange line. And seeing as how price could not get above this green line, we got above it here a little bit, but we came back up here and we dropped from that level. I would have considered this a lower high from this area and then shorted it. That wouldn't have worked. I would have gotten stopped out. But then once I see this, and again, this is hindsight, but this is just a review on a trade idea, a little bit of back testing here, and kind of an idea that we can look back on and say, if we were here, if we see this, and so that in the future, perhaps we can execute on an idea like this. So we see, sure, this initial short doesn't work out. But then when we see this candle close above the 8-period moving average, we could take a long. And yeah, we have to put risk down here. So it's a pretty big risk, 50 points or so. But look, if we go long here and we use a trailing stop, which by the way, for me historically it's really hard to do, especially since I'm day trading and I'm trading prop firms. I've talked about scalping before. Scalping is the way to go, especially if you're building up capital. So as much as you can scalp, you scalp, you build up your profits in any one account. Now, if you're at the point where you can stay in moves longer, which I want to do, and I do sometimes, and sometimes it works out and sometimes it doesn't. But here, if we go long, let's say at 21,453-ish, let's say, bam, right away, we get over 50 points. Boom. And the following candle. Wonderful. Now we move our stop from 400 up here to below this candle. Okay, now our stop is at 440. Let's go ahead and do this. So we take that trade long, and let's say our stop is here. Okay, stops at 401 at the low of this candle. So long here, 450, stops at 400. Now that's 50 points. That's 50 points. I mean, that's a lot of points to give up. It's a pretty big stop loss, right? If you're trading a full size contract, that's $1,000 risk on NQ. But anyways, if we go long here, we get this 50-point move right away. Fantastic. Maybe you just take off the trade right there and you lock in your $1,000. Done for the day? Maybe. Maybe not. If you want to stay in this trade and just trail the stop, well, now we're long at, let's say, 453 and some change, and we have a stop at 442, right? So now our risk is 220 bucks. If we stay in this, so this candle closes, okay. This red candle closes, now we can trail the stop up here. Now we have locked in, let's call it 25 points or so. This is all estimation, right? So now we lock in 500 bucks. Well, let's stay in the trade. This candle closes, trail the stop here. This candle closes, trail the stop here. So now we've locked in $1,000. This candle closes, trail it, trail it, trail it, trail it all the way up here to 618, and we get taken out. Okay, so that is a massive trade, and some call it the opening drive. I've heard it called, like, it's the opening drive, and it works out nicely. There is a way to get the data on how often a trade like this works out, where over the course of, let's say, from 8:30 to whenever, however long, you can use a trailing stop and each candle doesn't close below the previous candle. You know, we can get that data, but long story short here, this is $1,700 ish trade. That's not exact, but this is the type of trade that I would like to get really good at. All you have to do is plant your flag, take the trade and trail a stop and stay in it. You have to have the stomach to be able to put on and stay in a trade like this. But if you can stay in it, $1,700. Now, what if you put on a 2-lot? That's $3,500 within 45 minutes or so. It's a great trade. So that's just one idea, and it's something that I looked at yesterday. And when a 5-minute chart looks like this at the open, I mean, that is a really, really great move. And for me, I'm looking for moves like that. I'm looking to stay in moves like that. Okay, so this is, of course, the 5-minute chart. I have a Fibonacci sequence on here. I had 2 on here. I had 2 fibs. I took off the Fibonacci I had on here that was that longer time frame from the all-time high to this low I had on a fib. I took that off. I'm just using the fib from here, okay? Swing high, swing low. I just started using Fibonacci's in this way a few weeks back, but I have found putting a Fibonacci sequence on here. This is basic, out of the box, nothing crazy, but it works. It works quite well. So you take a fib, you start up here, and then you swing it down here. So swing high to swing low, and just watch how price respects these areas. Let me pull this across so we can see better. Let's just zoom in right to today, right? This is the 0.786 retracement level from this high. And look, I don't even have that fib on perfectly. You know, that high. Right? Look at our prices respecting that. We're kind of stuck underneath it. Now we could break out. But just look at the lines on the chart and look what price does when it gets to these areas. It's kind of crazy. So this is the 0.618 retracement level. And we look, price gets near it and comes down. Price trades near it and there's a pivot. Near it, there's a pivot. Okay, now we break down. When we do break below it significantly, like this, coming down here, what happens? Well, we get to another Fibonacci level, the 0.5, the 50% retracement level. We come near it and then we bounce out of it. Wow. Same thing here, come up, we drop below it, drop below this level, this line. Price comes up, boom, retracement into this area and poof, big push out. Where do we push to? Straight to this level, this fib level. And now we bounce, retrace and then coming back up in. So long story short, I keep an eye on these levels. There was, to get this P&L here, I shorted the market in this area earlier, and I got this move down, called this move down. That's how I got this P&L today. So it's just something to keep an eye on, something that I'm looking at and kind of adding this perspective to my toolbox. So now I have the 5-minute time frame, I've got the 8-period moving average, and I do put fibs on my charts as well. That's what I'm looking at. Now, I think that it is significant that today, with all this tariff talk going on, with AMD and Alphabet not doing so hot, that market rallied. I mean, look at this move. It's like this is a really, really nice move. This is yesterday. Here's yesterday's high. So we broke past yesterday's high. Can we go higher? I don't know. Maybe, maybe not for today. But here's the morning. Nice rally, 200 points. So, we're not exactly bearish as of right now, right? But from this high, and then we got that huge gap on the tariff information. We'll see what happens in this area. This is a 0.786 retracement area, and we're stalled. Do we drop from here? Or do we push up? Now, if we push up into this area, we can look for another retracement, and then we go, in my opinion. I could be completely wrong, of course. But let's look at one more trade idea for today on the NASDAQ. This is a really great rally. So I have noticed, and this is not an exact science, but this is 4 a.m. today. So we're just trending up, trending up, trending up, trending up, trending up. We get, big old news comes out. trending up, trending up. Here is the news, non-farm payroll, this big red candle. No, is it? No, it's this. When did NFP come out? Probably 7:30. So this is the NFP. This is just 9 a.m. But where do we see the cleanest move? Right here. Just like that idea that we went over. I'm saying we. The chances of somebody actually watching the video up until this point are very low. I want to remind, if you are watching this video, I make these videos for me so I can look back in the future and say, man, Nathan, you've come a long way. If this video is helping you, and I really do appreciate you watching this, if this video is helping you, give it a like, subscribe to my channel, reach out to me, let's connect. If you're still here, let's connect. Let's connect and chat. This is the best move thus far today, in my opinion. I mean, green, 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 1020 to 1105. Here's the Fibonacci level. So this was a decent retracement, and then bam, we get this candle and whing, shoot up. If we go long at 620, put stops here, we can trail a stop up and get a nice, nice, nice trade. This is the type of action that is just incredible. It's not easy to get in. It's not easy to stay in. But if you can get in anywhere, right? Maybe you wait for this candle because it broke the high here. Even if you get in at this candle, stops below, and you can trail that up all the way up here. So if you get in here, 648, you're out at 726. Awesome trade. Awesome trade. Great trade. Okay, that's another idea. Okay, I've got my 3 indices back. My 3 indice layout here. So here's ES. Looks similar to the NASDAQ. What I see, this is a 5-minute, yep. Nice rally, same thing. Come down into this fib area and poof, we push out. YM, this is an hourly. Let's go to a 5-minute. The Dow, got the fib on the Dow too. The significant push into the fib that I see is right here, right? This is today in the morning. We drop down into this area and then it's just been kind of pushing up. I primarily trade the NASDAQ. So one thing real quick about consistency. It took me years to get to the point where I realized, internalized, and really practiced consistency outside of trading, and realized how important and how aligned I have to be with my consistency while in the markets and outside the markets. Consistency doesn't just mean executing trades, buying, selling. Consistency means journaling every day. Consistency means meditating every day. Consistency means exercising every day. Consistency means showing up for my family every day. Consistency means reading a book, reading a part of a book every day, going for a walk every day, being consistent in all of those other areas. Then I stand a chance. And it helps me to keep my confidence high.